Welcome to Markets Now. I'm Michelle Rourke with DuWayne Bosse at Bolt Marketing, and we're seeing higher prices in all but wheat and nearby hogs this morning. DuWayne, it's about time. We're finally seeing a little bit of a bump in the corn and soybean market. Soybeans made new lows for the move, though, before we did that. And so what's lifting the market this morning? Is it just a little bit better idea of negotiations between the U.S. and China starting to go a little bit better here with the president's going to talk pretty soon?
Yeah, that's the rumor trade talk is that President Xi and President Trump are going to talk this week. So hopefully, whenever they talk, it seems like that ends with a, hey, that went fairly well. Face-to-face negotiations or talking on the phone always seems to go better than the social media. Social media, everyone can hide behind and say that, I'm going to be tough. I'm going to be hardcore. We're going to get what we need. But I'm hoping, and I think the market believes that we'll come out of that phone conversation with some sort of good news. It also feels like just a turnaround Tuesday type trade this morning, Michelle, where we were down hard yesterday and the market's just recovering a little bit.
Right. We also heard some news that we don't have confirmed yet, but that maybe the U.S. has extended the time period for the tariff delays with China into sometime in August. Is that right?
I did see some trade talk about that yesterday afternoon. I haven't read a lot about it today, though, and that to me should be some fairly big news, big information. But when the president kind of announced that the tariffs were extended or the pause was extended last time, our markets didn't have a big rebound then anyway. Really, other than the first tariff talk trade for a week and a half, the markets have handled it fairly well. But so I can't confirm that did happen or didn't happen, but the tariffs are not in place right now anyway. But so I'm hoping they can get some sort of trade negotiations done, because really China should start buying some of our new crop beans right now, and they haven't bought a bushel yet.
Right. And it's not a concern now, but as you point out, it will be as we get into harvest. But right now, the news that we have is that these are going to be delayed again until August 31st, I think was the date that I saw. What about support that we took out yesterday? What are you watching technically in the soybean market here now that we've kind of broke down?
Yeah, for me, it's that low we had of support of around that 1036 area in July beans. We're back above it this morning. Hopefully we can stay above it. There's a lot of moving day averages above the market, 20, 50 day, even the 100 day is up above. It'd be nice to get above those. 2 weeks ago, this market rallied on really a lack of news and got above all those moving day averages. When that happens, the technical picture starts to look better. And I thought the funds that were at that time short would want to buy the soybean market because it looked good. And then we sold off last week on good weather. So, boy, it's a lot of back and forth type trade and really almost tough to trade technically because we're so concentrated on weather right now.
That's right. Is that the problem with the corn market? We made some new lows for the move again this morning and actually took out the May lows, right? Before we bounced?
Yeah, we did take out the lows overnight, which is the calendar year low. I think that was a typical deal of the overnight trade with a little lighter volume, was able to push through, run some stops. And then we saw some buying interest before the pause this morning and a little bit higher market this morning as well during the day trade. But yeah, going back, it's really tied to weather. I'm getting a lot of phone calls here, guys saying my corn doesn't look good, and why does the trade think it's all already made? It's the extended forecast. When you get in the month of June and you've got 14-day forecasts that show average temps to maybe even below average temps now, but above normal precip, and then all the rain in the 5-day forecast, which is really the only rain forecast I can trust, it's just really hard for our row crops to rally during a weather forecast like that in the month of June.
But the bulls are going to say, hey, we have, almost 9 million acres of corn yet to plant or very close to that, right?
Yeah, that is out there. And I saw that this morning too. And you got to look, where is it need to be planted yet? And where's the forecast of rain? And it does make it interesting because it's southern Illinois, it's Ohio, it's parts of Indiana, Kentucky, Tennessee. And that's where the rain is forecasted to hit this week. And I've heard from other brokers in that area that guys are still planning on planting corn this week, maybe next week, but then they'll really have some decisions to make. It's probably not a big market mover eventually in the markets because of the prevent plant. We assume about 4.5 million acres of prevent plant nationwide. And I think USDA used that in the March 31st planting intentions report. I'm in Northeast South Dakota. We usually have a lot of prevent plant, and we are going to have very little this year. So I think these acres, if they don't get planted, to some extent, are probably already priced in the market. But we'll find out later this summer. That's for sure.
Right. And I need to put my glasses on because it's not 9 million acres. It's 7.1 million acres left to plant with what we have nationally.
Right.
We have had a lot of pressure, though, on the market, as we've said, and some of that coming from weather. But we've also seen the old crop, new crop, the July, December spreads pretty much fall apart, that bear spreading. Where did it come from?
Well, I wish I knew, Michelle. I'm one of the group of brokers, of several brokers, that don't quite understand that spread. Because if we're looking at the USDA old crop S&D tables, it shows a tight ending stock situation, and that should make for that bull spreading to happen. I think what we've got here is kind of a perfect storm for that spread not to take off. It was a very good winter, at least in the Western Corn Belt here. So I think a lot of people moved their corn during the winter. Put the hired man in the truck and kept moving grain. The commercials, the elevators, they feel like they don't need to buy it for it yet because they have all this supply that they got during the winter. If USDA is right and our old crop ending stocks are this tight, that basis and that spread you just mentioned should really improve this summer, but we just haven't seen it yet. So if it doesn't improve, Michelle, I think it's because last year's crop had to be bigger than expected. We probably did yield over 180, and we won't find that out probably till October, which is a little bit frustrating, but something's not matching up here.
All right. What about the Brazil crop, though? That's almost 140 million metric tons on one of the prints yesterday, one of the private estimates.
I'm glad you brought that up, and you're 100% right. Yesterday, the news was kind of filled with different forecasters, different companies coming up with larger crop sizes in Brazil, and probably rightfully so. Their second crop corn kind of had a phenomenal season, got a little bit of rain to finish it off. The number I like to use is it's going to be a 10 million metric ton larger than year over year. And that's a lot more corn. And the second crop, they like to export that. So we will have to compete with them for exports moving forward. But here's the thing, Michelle, if our US dollar keeps trending lower and our prices are low for corn futures anyway, look at our weekly inspections report yesterday. We're going to keep exporting this market. I mean, maybe they've got a big crop size, but I think we can still compete at these lower prices. It's not like we're at $6 corn.
True. Okay, so hopefully the corn market can hold together this morning because the wheat market is trending lower. Is that profit taking or a little bit better crop ratings?
I'm reading this morning the trade was kind of surprised by the increase in crop conditions in North Dakota for the spring wheat. It went up about 11%, but I was kind of giggled at that. I was surprised the trade was surprised at that. I mean, it was such a poor rating last week that it only had one way to go. And being up here this far north, I can tell you exactly what that crop needs is it needs some sunshine and some heat. And we got some of that last week in North Dakota. That's why the crop conditions improved. But that's also why it's kind of tough for these markets to rally moving forward, because I don't think the crop conditions are going to deteriorate. We're going to continue to get better. Now, we're definitely dealing with a smoke and haze, and I don't know what effect that'll have on spring wheat and corn long term. Hopefully that just stops because it's rather annoying up here in the Dakotas. But that's why the wheat market's maybe seeing a little bit of pullback this morning is the better conditions.
Gotcha. Okay, the cattle market, we're higher again, and it's all about the cash trade. And you and I, we've talked about that over and over again, haven't we?
I do. I feel like a broken record when I talk about the cattle market, but it's the truth. That's the news that's out there. You got this cash market that's so fundamentally strong, even with all this negative headlines of screwworm and possible bad things there. Packers still can't buy cash cattle at lower prices. We're hearing what the 230s, 235s for cash cattle. Well, that means the June board at 217, 218 is way still undervalued. And a couple of weeks ago, I would just say, well, it can do that this time of year. Well, we're getting closer to delivery on that June contract. Cash and futures really should try to merge a little bit more. It makes for a really tough market for hedgers here because they want to hedge, they want to protect, because guys like me are saying they should just in case these are high levels, but you're at such a wide basis, you feel like you're giving something up even by hedging.
Absolutely. And I guess we'll see. The funds, to me, have not pushed that futures, though, as hard as they could have when you've got that big of a disparity between cash and futures.
Right. And I think They shouldn't. They're already long. I think a trade you're going to continue to see is they'll buy it during the week, they'll buy it during the day, but by like a Friday noon, I bet you they sell off some because they don't want to be long the board over a weekend, worried that you could get some sort of headline that screwworm is in the US, or the flesh eating, worm parasite, how could it affect cattle. It's not a good headline. So we got to remember funds are already extremely long. I think they want to buy it. The fundamentals say they should buy it. They should say I should buy it too, but I'm like them. I'm afraid to buy it at these levels and push it, even though it looks like an easy trade with a cash market that high.
For sure. Okay, hog market, we're seeing some bear spreading this morning. The index, the cash index has been rising, but futures are still too far ahead of it. Is that what the problem is?
I think we're just getting some profit taking here. I really like the
Okay.
hog market here. I think cash is good, cutouts are good. It's the cheaper protein, which eventually will come into effect too. So I kind of like the hog market. I mean, we've got up to some high levels, some chart resistance, Michelle. So I think you're right. I think we need that cash and cutout to really push through that resistance. But eventually, I think it does.
Yeah, and cutouts are at above $1.07, and that is a level we haven't been at for a long time. So that
That's
should
right.
continue to be supportive, right?
I think so. I really like that. Would love to see it get up a little bit higher and then get 120 hogs, but that's me wishing again.
All right. Thanks so much, DuWayne Bussey with Bolt Marketing. That is Markets Now.